Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor, speaking to you from the borough of Queens in New York City. It is the 21st day of June, 2023. Before I go further, I would like to suggest that viewers might want to begin watching this show on my Rumble channel, where, unlike YouTube, free speech and ideas of all human beings are welcome and respected. And I'm saying that because those who censor put themselves in a position very often when if they're wrong, in fact, with their censorship, then they have to sort of double down all the time. And that continues to take place until only a very elite number of people are given a voice. It is my real belief that America, that our founding fathers gave us back in 1776, is now largely gone. As long as we still have some free speech platforms left, I intend to use them as much as possible. So in case this and future videos disappear from YouTube, you can find the show on Rumble, at least for now. Well, I've titled today's show, Are We in a New Equity Bull Market? We have, some people think so. I was just seeing a YouTube, or actually this was on Zero Hedge this morning when Lance Roberts was suggesting this time it is different. On the other hand, Daniel DiMartino Booth, well, she's not so sure. She says, recent moves suggest craziness is hitting new heights with the largest stocks on this S&P and NASDAQ consistently trading near record high valuation ratios. We can't help but grow increasingly concerned that the unsustainable will not be, end of quote. Well, to help us answer the question and try to determine who's right in that discussion of bull market or bear market, Chen Lin is with me today. ChenPicks.com is the place to go to pick up on Chen's letter, to subscribe to that excellent letter. Chen has had a very successful career trading, buying, investing, and has some very interesting views on the world. He sees things that other people don't see, which is one of the reasons he's been so successful. In the second segment of today's show, Michael Oliver will join me to tell us what his technical indicators are telling him with regard to the major markets. But right now, I want to say thank you to Chen for joining me. Thanks for being with me, Chen.
Thank you, Jay. Glad to be here.
So where do you come down on this with regard to the markets? The equity markets do seem long in the tooth, but lots of cash out there. Could Lance Roberts be right? This time it is different, at least for now?
I doubt it. I think the rally has been narrow for quite some time. It showed a little bit sign of broadening recently, but only limited. My point is there's just too much cash on the sideline, and then there's so much short on equity and short on bond. Okay, there's a lot of very large short position there. So those combined together got into a pain trade, so-called pain trade. That's market's going up, and it may go up a little bit more. So it's very hard to speculate where it will top. But for me, I'm more interested in my own sector and my own stock. So they're running on their own fundamentals. So I'm happy. I'm very happy. In the past 6 months, my biotech completed turnaround. Biotech one of the best sectors right now, and I did very well in energy, and I also pick up gold and silver at lows last year when when it was going down in that later last year. So far so good.
Yeah, well, for sure, Chen, you are a stock picker. You'd be the last guy I would expect to be buying the indexes, and that has served you very well. Well, let's talk about some of your biotechs. I mean, I don't know of anybody that's done better in the biotechs than you. Maybe you know some of your hedge fund colleagues that have been extremely successful. But some of them that I know, one of them that I know very well is Amyris, trades on NASDAQ, AMRS. It's been very frustrating. I know you've frustrated with it as well. And yet it seems to have something very, very, potentially very, very profitable. This technology. Just talk about Amyris and what your thoughts are on that company now.
Amyris, I've been said all along, I believe its technology worth billions of dollars. Okay. It has run by the management has been terrible. Just put it this way. I mean, I'm quite polite to say they're terrible. I wish they were fired. They basically, in the past 2 years, they squandered about $1 billion. And now they come to the point. Remember, we met 6 months ago, Christmas, having dinner together, and then I saw Amyris news. They're raising money. At that time, $1.50. I was so upset. I told my subscriber, I'm selling half, okay? It's just because he broke every promise he gave us, and he raised money. He had the guts to raise money just before New Year, $1.50. So actually, that was good. I sold half, a little bit more than half. And recently, I bought back, right? I put in my newsletter, it dropped, actually continued to drop. $1.50 actually was a good sell. I wish I sold all of them, but that's okay. You know, you can never be 100% right. I bought back around 70, 80 cents, right? So I put it in my newsletter. One of the reason is I learned through my connections, my fund connection, that the convertible who's shorting the Amyris are covered. They are covered. They have like mostly covered. Okay, not Hanman, but the people we talk to, you know, they're shorting like 30 million, 40 million easily, because you think how much need to hedge their convertible also got crashed. So that's why they're shorting. When they issue convertible at $6, $8 range, they short it all the way to 60 to 80 cents, and then they covered because they think they already got their hedge. So, and I'm not driving the company to bankruptcy, they're covered. But the short interest is at all-time high. What that means is someone shorted, massive shorted, 60 and 80 cents range. They short huge position. That's first thing. That's speculation. They believe the company going bankrupt. Second, what happened was that triggered me buy was they got forbearance from their loan lender, right? Forbearance for a year. So they're not going under for a year. Third, they got from John Doerr, their billionaire supporter, 50 million, right? 25 million already drawn, another 25 by the end of this month. They got 50 million from him, forbearance from their lender. So they seem to me they should be okay for 6 to 12 months. I mean, for time, and most importantly, PCW, PwC, PricewaterhouseCoopers is running now. They going to cut the cost by 250 million, which means they're going to lay off a lot of people, and then they'll keep the company profitable. So all these are coming in, but there's such a huge short interest, 65 million last time I checked. So, and then the short's a new short, and they're not like they shorted from $6 down. No, they shorted at 60 cents. So I figure out this is the time we can stand up and fight. So I bought back all my positions around 60, 70, yeah, not 60, 70, 80, mostly 70, some even at 90. I wish I bought back, I double my position. I didn't, but I still don't like the company where the way going. But for the risk reward, this is really good. Plus, they also plan they do JV. United States may finally wake up. They need a biomanufacturer, and then biomanufacturer can put together with AI, which is very hot area. With AI, they can make any molecule, anything on Earth. So the upside is unlimited. And the short up betting on they will bankrupt this year. I think that's wrong. So that's why I bought. So far, so good. The stock almost doubled since I bought.
Yeah, well, they've been using AI, as I understand it, Chen, now for they've been using artificial intelligence. So, but what about Mello is still there? I mean, isn't that the problem in your view?
He's the problem, yeah. But now
why is he still there? John Doerr likes him, but
John Doerr likes him.
Money,
that's the reason. John Doerr likes him, but now he has to report to John Doerr every week about he's like he's handcuffed. He cannot just.
Okay.
Just to take those. So there's the changes in the company. There's massive layoff, cost cutting. They already said they will cut 250 million. So they're doing deals. They may get into profitability in a year or two. So I mean, my point is the glass half empty, half full, right? So we were too bullish. I was too bullish last year. I was wrong. But on the other hand, the short thing they're going bankrupt this year. It's wrong too, I think. So that's why I bought back my position at the much lower price than I sold. Yeah.
Yeah, well, the technology, as I understand it, is amazing. as you were laying it out. And so maybe there's hope there. Owned some. I've been disappointed. Maybe it's time to look. What's it selling at now, more or less, Chen?
Today it's about $1.20 something.
Okay.
Yeah,
Okay.
it's decent, much higher than and then the short are paying more than 100% right now, and I loan my share out to the shorts. I'm getting about close 30%. I don't get the full percent, but my broker probably pocket most. But I'm getting more than close to 30%. Just for loaning my share out.
Wow,
Yeah.
that's pretty good. That's pretty good. All
Mhm.
right. Well, let me ask you about a couple of other pharmaceuticals. You have AUPH as a symbol. How do you pronounce it? Ariane?
Yeah, that's one of my tiger, one
Pharmaceuticals?
of the key position. That's just what I'm telling you right now. I think it's close to fair value. I'm selling the covered call, right?
Okay.
Today is the last day. I have $10, 11, 12, 13 calls. They're all going to expire. Looks like if they're not over 10, they're going to expire. And then I'm going to sell again next month. So I'm getting about 5% each month, right? So if they got called, they got called. I mean, I don't mind, because you see the chart right now. I bought a lot also last year, around $4, $4.50. Now it's went to 10. I think it's close to fair value. So I just using the bull market, using volatility, you just sell covered call. That's one of my trick in the bull market. I think same thing in other energies, in other sectors. When the bull market coming, and then you're getting close to fair value, you just sell the covered calls.
Mm-hmm.
I mean, I have another one, a cruise liner doing extremely well. I plan to sell covered calls. So that's just an excellent way, because you get 5% each month, okay, just by sitting there if it doesn't move.
Yeah.
If it move, you get more because its strike price is higher. You get 20%.
Right. Well, what does that company do?
Oh, they have approved the drug. It's a pharmaceutical. They already getting to graduating from biotech to pharmaceutical area.
Okay.
So they're selling a drug. They're selling relatively well. They have very, very good balance sheet. So they don't need to raise money for the foreseeable future. They already said that. So they just sell the drug. So you see them making progress. Selling last year is selling about 20 something million. A quarter now is 30, and then they will be break even, start making money. So it's kind of boring. But in last year, we got like $4 something. That was the bargain. Now it's not the bargain. So I'm selling the call. I have quite a few stock are doing this.
I understand.
Yeah, so you just, generating income, a little bit better than 5% T-bill.
So do they have a portfolio of drugs?
No, they're just one drug.
And what does it do, Chen? That's my question. What does it do? What does the drug do? What?
Oh, the drug is one of the. I just my head blank. But I'll get back to it. It's one of those drugs. I forgot the name of that. They're competing with competing with some major farmers on that. Okay. So I will just
The people can do their homework on that. It's
So
the Nasdaq selling at 975.
970, perfect, because I'm selling $10 call expiring today, so it's going to be worthless.
So are you writing short term, like 1 month covered calls? Or
1 month, every month. Okay. Today is the last day, Friday. It will expire if it stays this way. If it goes to over $10, mine will be exercised. But below that, it will expire, and then I can write next month, right? I just continue, and I don't just write $10. I write. You can write 11. You can write 12. I wrote at 13 this month, so they're all going to expire.
Yeah.
So
okay.
That's just a way. I'm just telling you, that's just a way to take a profit.
Yeah, sure. Of course. You get a good return that way.
Right.
Also, one other one I wanted to ask you about, symbol is DAWN, DAWN, Day One Biopharma.
Oh, Day One, yeah, that's another stock I just mentioned in my newsletter. The same idea, just a right cover call. It's not very exciting. Their drug data won't come out for a few years. But they just did a $13 raise. It's half of the 52-week high. There's 4 major company, JP Morgan, whatever major famous company, they did a raise. They're going to come out with very positive research report. I see $13 very safe. You buy at 13 and below, and then you sell covered calls.
Okay.
It's not a lot of, I put a newsletter early this week. I think it's not a home run. There's some biotech a home run. Okay, I'm hoping for 10 bagger, even more or more, right? So some are just, you take maybe you take a 20% in a month or 30% in a month. That's not bad, right?
No, not
So,
bad at all.
right. So this type of stock, because they have no catalyst, very
Right.
boring, but you get a very good price. You can write
Well,
cover call against.
well, sometimes boring is better, depending on the markets and what opportunities are out there and risk reward, and you've done very well. Let's switch to energy stocks, Chen. Tag Oil is one that you like a lot. 70 cents, trades in Canada. TAO is a symbol.
Yeah. They are doing a first ever fracking in Egypt. So that's very significant. Okay, so this will change the world if they are successful, because Egypt will become a major oil producer if they find the Eagle Ford in Egypt. Their plan is to find the Eagle Ford. And so they're going to have initial results next week. I heard very, very soon. So, and then they will drill the first ever horizontal well next month. And then we will see the horizontal results in a couple of months.
Yeah, well,
but the initial result is 30 days. Usually, you accumulate, it takes longer than 30 days. You have to want to see what the chart, the curve looks like, right? Compared to Eagle Ford. If it's 90 days, and then it takes some time for people to have confidence in this. But if it works, it's huge. It's a 10 bagger. Right? Because it's like Eagle Ford. Who owns most of the Eagle Ford? I'm nobody, right? But if just a tiny juniors own so much, that's very significant.
Okay, so that's a home run type of a play.
Yeah, home run.
If it hits, it's really big. If it doesn't, well, so it's
it doesn't. If it fails completely, it just
more risk, but more upside.
Yeah, a little bit like Tricida type of biotech, right? Similar. Every stock is different in different sectors. This one is those type of very high return. Okay. And there's another company I mentioned to you a little bit, Glencore in Colombia. They are paying about $1 in dividend each year. So you pay about 8%. But when I talk about that, was paying 10%. Even at the moment, paying more than 10% when the Colombia election came out. So it's different. It's very stable. They have a stable base. Mm-hmm. They are buying back shares. They canceling shares. They have actual free cash flow. They pay dividend. People, it's just like because they have this socialist lefty president at Colombia. So people got scared. So they exit Colombia. That's part of the reason stock weak in the past year. But now it's about to change because they generate enough free cash flow to pay the dividend and then to buy back share. And then they're going to build a new pipeline. They can potentially double their free cash flow. Plus, El Nino is starting. El Nino have a rainfall in certain areas, usually cause drought in some area. Colombia last 10 years ago when they had El Nino, it had drought. The natural gas price spiked. So they can sell those natural gas at a sky-high price. I mean, so by my calculation, if it's just like 10 years ago, they will generate enough cash flow as if their free cash flow as their market cap. Mm-hmm. I'm not kidding. So this is just one of those stocks. You buy and sit, you collect dividend and sit on this.
Didn't you get about an 8% dividend on it now, where it's selling out thereabouts?
Yeah, about 8%. It used to be 10, of course, maybe a little bit over 10 when I was pounding the table in my newsletter. But now it's still not bad, actually. Yeah. So, yeah.
Not bad. Well, let me ask you one other company that's it's a metal producer, Cerro de Pasco, selling at about 11 cents in U.S. money, Chen, and CDPR.
Yeah, Cerro de Pasco. I just, first time I brought the management to the Metals Investment Forum last month. I have a long talk with them. They're getting very, very close. If you look at the insider report, just check insider report, the CEO was just buying all the way. They are very close. They're about a few weeks away from getting the easement from the government. Then that would trigger the Glencore gave them $2 million US. Glencore just gave them. Okay, there's no special condition, whatever, nothing. They just gave them 2 million. The 2 million will be paid back after production. Okay, so you never saw no warrant, nothing. So you never saw Glencore would do something like that, except Glencore is extremely excited about what they're going to do this summer. So they're going to drill out this deposit. It's not deposit, it's a historical tailing. And it's different than the deposit is tailing, you know what's inside because you have historical data. Mm-hmm. There used to be a copper and gold mine and then become a silver, lead, and zinc. So you kind of have some idea, okay, what type of metals in there. They estimate 500 million ounces of silver equivalent, at minimum 500 million. So this will be one of the largest above ground silver deposit. And then the beauty of that is that there's a processing plant right next to it, right? So Glencore owns that. So they can potentially start pumping it next year. They get into production next year. They start producing gold and silver and copper and whatever. So this is very, very exciting. That's a little company. I think will have make a leapfrog, just like he did before with Aya Gold and Silver. If you remember, I used to call Maya and Gold and Silver on my recommendation list. Best performing silver stock in the past decade, right? So in Morocco. So he was the founder and CEO of that. Yeah. So I hope this happen for the second time. I mean, because once people see the cash flow, the stock is tremendous undervalue. And once they drill it out, they have 43-101 next to a mill. They can sell royalty now. They don't need to raise money anymore. They did a raise because they need the money to do all these things. But once they have resource and then they're about to get into production, they can work with Franco-Nevada even, because this is one of the largest silver wheaton precious metal. Whoever, they can work with the largest royalty company, and then they got hundreds of millions of dollars on check just for a tiny little bit of the royalty. So they don't need to raise money anymore.
So Chen, will they be drilling out that this is a waste? It's the tailings?
It's a tailing, historical tailing for the past.
I mean, it goes back a long time. It goes back decades and decades, right? And early on, it was a gold copper, and then it became more a silver, lead, zinc, and continued mining. So are they going to drill this whole thing out so that we can have a 43-101 resource, perhaps?
That's the plan,
I see.
That's the plan. That's why Glencore gave them $2 million to drill out, have 43-101. The only thing Glencore wanted is the core. So they want to do metallurgical study on that. So they want, they can prepare their mill to processing that. I think that's what Glencore have in mind.
Well, I thought Glencore wanted out of there. I thought they were going to leave for that Cerro de Pasco.
So they already, that's the problem. That's why we shareholder waited for so many years. Glencore originally signed to want to get out of it, to give it to them for $1. Right, all the mill, everything, because it's a liability for Glencore. They're not making money. And then this new CEO come in. He's young and energetic. He think he left too much money on the table. So they came out with this deal. But anyway, Glencore need them. Glencore need them because their mill is not generating any cash flow because they cannot mine there anymore because of NGOs or the other things. But they have a license to processing the tailing. So that's the beauty of that.
Okay, so Glencore can't mine, but they can go through Cerro de Pasco. And
so that's why they think they can be a partner. If you ask Guy, I worry Glencore will buy us out. It's so cheap, they just buy it. He seems to, I ask him at the Metals Investment Forum, he thinks because Glencore, his image and NGO, they may not want to buy Cerro de Pasco out. They may just use Cerro de Pasco to mine, and then they processing. I mean, maybe they split the profit, but that's a huge profit, right? Very, very, very good mining operation.
I see, Chen. But when I looked at their last quarterly statements, they had an awful negative working capital. Can they continue on? Where does
the problem is they have another zinc mine. It's separately. They have another zinc mine, and their cost is about $1.50. Last year at $2 zinc, they're making a lot of money. This year, $1.10 zinc, $1.20 zinc, they're losing money.
They're losing money.
So what happened is they just own the contractor money. They Oh, I
Oh,
talked to Guy about that. So they don't want to dilute the whole company. They want to dilute on that project. So they just own the contractor money, and then they gave the contractor percentage of the mine, that mine, just
oh, I
on
see.
that mine. So the contractor probably happy because the project they have a high grade area, but will take a few months to get there, and then
Oh,
that will drop the cost to below $1. Will be a profitable mine again.
okay.
The contractor they're bearing all these costs, and then they got a cut of the mine. Maybe that's they're talking about that, but no guarantee. But they don't want to dilute, use that to sink the whole company.
Yeah. And I think it's a very good story. It's just been so frustrating for me. And I looked at that awful negative working capital. You've helped me understand that a little better now, Chen. So, yeah, I mean, maybe it's a great story because there was an environmental issue there, and Cerro de Pasco's in there helping to clean it up, helping as good citizens to make it a better place for people to live. It's a historical story, isn't it? I mean, it goes way back to the days of the Rockefellers, and
Yeah,
a lot of American money was down there making a fortune, and they left the place in shambles to a certain extent.
and what a shame! What a shame! Yeah.
Shame. Chen, before I let you go, I got to ask you about gold and silver. What are your thoughts on the gold markets? I mean, we were up above $2,000, back down, and equity. Everybody seems to think the equity markets are the place. The general equity markets, especially AI, as hot as can be right now. But what about gold and silver?
Yeah, that's a good question. I think I literally think the gold silver market probably manipulated. I'm not actually, me. I don't make those kind of claim that much because I think because the Russian, right? Russian is selling gold. Okay, Russian because in order to fund their war effort, they need to sell the gold. So by selling the gold, so the West world need to suppress you can see that recently in the past few months, every time gold hit 2000 someone time around, it's not necessary just to suppress the gold price. They just don't want to see gold price run away. So Russia cannot sell gold, they at the higher price to fund the war effort. I think that's probably the reason gold got hammered. But you can manipulate for some time. You can manipulate all the time. I think we just right now it's summer, it's quiet, and then there is index rebalancing. So some very good company got sold very hard recently. So you can pick up some good stock. And then wait for it to rebound. I think eventually we'll break 2000, and I'm on our way to much higher.
All right.
And
Well,
I especially like silver. Silver is my
yeah,
favorite.
well, you've talked about silver, especially with the green energy theme growing around the world to the extent it is. Silver really comes in handy, doesn't it? As does copper and some of the other metals as well. It's that people forget that you're going to have to tear up a lot of ground and spend a lot of energy to get the metals out you need to stop using the energy. Stop using the petrol fuel. So anyway.
Yeah.
Well, okay, Chen, anything else just in parting? Well, I guess we should be watching some of those
Uh,
biotechs, I guess. You're going to
yeah,
be spending most of
yeah.
your time. Biotechs, energy, and
Biotech energy, and I'm waiting on gold and silver. I'm picking up a little bit here, a little bit there. I try to buy those high grade, rare to find, and then with company with the catalyst coming. You want to get in early, or as usual.
yeah.
So there's a
Well,
lot of
you're
exciting idea out there. And then the third Pascal is to watch this summer. If they got it, the stock can be gone if they deliver. Finger crossed.
which one was that, Chen?
Third Pascal.
Cerro de Pasco. So
Yeah.
so another potential home run, I guess. So you see
Yeah, if they deliver this summer, watch out. Yeah.
as an 11-cent stock. I might say most people run away when they see 11-cent stocks. They want $11. They want 1,100.
Well, not for the CEO. He has been buying every day. Just check the insider.
Well, that's an important. I wasn't aware of that. I wasn't aware of that.
Mhm.
Chen, thank you so much for spending time with us. It's always great to talk to you, and we should do it more often.
Okay, great. Thank you.
All right, folks. Well, don't go away because Michael Oliver is going to join me, and we'll hear what he has to say about stocks, bonds, commodities, precious metals, according to his objective analysis. I think it's very objective anyway. He lets the markets do the talking. Structure and momentum is what he uses in his proprietary work. Always enjoy Michael, so don't go away. Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, speaking to you from the borough of Queens in New York City. It is the 21st day of June 2023. Before I go any further, I should tell you that, well, I'm really pleased to have Michael Oliver with me once again. And I should tell you that I may be doing more stuff on Rumble from now on for reasons that I think should be obvious, given the content of this show. And anyway, Michael is with us again. So glad that he's here with us once again. Thanks for joining us, Michael.
Hi, Jay.
I have to ask you about these markets. They just seem to be nuts. There doesn't seem to be any end of it. Now, I know there were trillions of dollars that were pumped into the economy, by starting with Trump, and then also with Biden, and there doesn't seem to be any concerns on their part. Money should just grow on trees, and we can have endless amounts of it. Is this what's keeping the stock market elevated? I mean, there seems to be so many reasons that historically overvalued, probably at least as high as at some very problematic times in the past. But what are your thoughts about the equity markets now, Michael?
No, we still go with our assessment in January of 2022. We said that's the top. We're going into a bear market, major bear market, a bubble breaking that is the biggest bubble in U.S. stock market history in terms of the percent gain for a dozen years in the S&P and the NASDAQ 100. There's no comparison. 1920s don't compare. The .com doesn't. Nothing compares, both in terms of duration of the bubble and the percent gain of the bubble. Okay. We know what caused it. Look at an M2 chart or look at a Fed funds chart. Fed funds went to zero, laid flat there on the mat, basically effectively free money. So people made investment, corporate decisions, state expenditure decisions, all kinds of decisions were made. Probably in the early days, they doubted that money could be that cheap. Mm-hmm. Then over time, they learned, oh, it could stay cheap. It could stay cheap. And therefore, they really committed to the notion of free money. Now, all of a sudden, it's 5% plus on the Fed funds. T-bonds have collapsed over the last year and yields have gone up, exploded. So all of a sudden, somebody yanked the rug out from under them. Well, it's the same institution that helped create the bubble, that's helped burst it. Mm-hmm. Now, they thought they were going to burst a commodity bubble, and in quote, inflation, which they narrowly define, not via rising paper asset prices. That's okay. But, when the price of eggs goes up or chicken or beef or gasoline, then all of a sudden it's panic time. Yeah. And so they punched a hole in their balloon. But what went down? Well, commodities were already correcting since early 2022 anyway.
Yes, they weren't really in a bubble.
Yeah, in February, March, they had a surge that doubled the commodity index. It peaked shortly after the war started. So the entire move occurred before the war started in Ukraine. So you can't blame it on that, which they tried to do. But what it was an asset class shift of people, asset managers like the Ray Dalios of the world, saying, hey, the stock market on various variables is off the page. It's high risk. It's going to be low reward. Check me out, or at least begin to check me out. Mm-hmm. And I'm going to start putting more money into real assets and companies that make real assets, fertilizer companies, grain companies, oil companies, et cetera. And they did quite well. While the S&P went down over 20%, NASDAQ went down over 30% in 2022 versus 2021. So what broke was not so much, certainly gold didn't. Gold actually had a flat year. Yeah. 2021, 2022. I've said this before, it's getting boring. Yeah. Silver was actually up 1% or 2%, 2022 to 2021. So something was wrong there. Okay. Anyway, so they're still playing tough. ECB is playing tough. BOJ is playing tough, and we think that this, quote, recovery in the stock market is likely near its end. It has been led by about 5 to 7 stocks, and you can name them yourself. Mm-hmm. One that got recently included, which is now a big component, actually, is like 5 or 6%, I think, of the S&P, certainly the NASDAQ 100, NVIDIA.
Exactly.
So you circle those stocks and look at the percent gain they've had since, let's say, October last year. And it almost explains the entire S&P move.
Right.
So, okay, so we have a very narrow but, quote, broad market because it's the S&P 500, but it isn't the 500.
No.
It's the S&P 5. Okay.
Yeah.
But people are ignoring that. And our metrics are momentum-based metrics, not just looking at the price chart, which looks like, it's beating its chest. The momentum metrics say, one, you're overbought, both weekly momentum and monthly momentum now. You've got pending structures below, meaning if you look at the momentum charts instead of the price charts, see dynamics waiting not far below current levels, such that if you even sneeze and start to roll over a bit, you're going to start breaking trend lines that go back 6-7 months on momentum charts. Again, not the price charts.
Yeah.
Price charts look like I'm going to forever upward. So we're highly focused on the stock market. Now, at MSA, we look at all 4 asset categories. Foreign exchange, which has been actually reasonably dormant for 7-8 years. Dollar index has been in a range of 10-15%, which is not, up and down, teasing rallies, teasing sell-offs. So the Forex markets have not been extremely volatile. Commodity markets have come out of their extremely depressed levels of 2020, which we call theoretical zero. All commodities exploded. Then they've had this like 10-month, 11, almost 12-month correction, which has been modest. It's 50% correction in the Bloomberg. Some markets more, some far less. And we think it's now starting to turn back up. In fact, if you close the Bloomberg, even somewhat below where you are right now, we're going to break out on our monthly momentum back to the upside for the first time since we topped in early 2022, indicating that the commodity, quote, bubble, which really wasn't a bubble.
No.
It was coming from the sewers up to the street level, okay?
Right.
Is going to have another leg, okay? We think it's going to be primarily led by ag-related commodities. That's meats, foods, grains, sugar, etc. Not by energy, although energy will participate. We don't think it'll lead. Meanwhile, gold's sitting there hovering at the highs after having gone down and tapped out this price chart low that every idiot could see who drew with a crayon, drawing a chart through the lows of the last couple of years. They blew it out by $60 or so back late last year, and then immediately shot back up to the highs. Like, okay, I knocked you out of the market, ran the sell stops, and I'm back to the highs again. And now for 4 months, gold's been spinning, basically in the mid 1900s to just over 2000. But if you look at a monthly price chart of gold, you see basically that there was a sort of a gradual downtrend line. Go back to 2020 and the 2022 high monthly close, and draw a little line across them. We bumped it in January and pulled back, and then we broke through it in March. And everything since then, gold has just been spinning its wheels above this price chart trend line and below, going through 2100, which would blow the price charts out. Silver set up similar levels at around $26, such that if you go back up through 26 now on silver, you don't have to go back to 30. It should launch.
From
the price chart, the price chart folks should say, "Oh my gosh, we were wrong. Gold's at 2100 and silver's going through 26, and it's you should get a speeded up situation." But we think that probably that will be somewhat timed with a rollover in the paper asset bubble again. Meaning, watch the stock market.
So Michael, I think there was a little bit of broadening in the market in the last couple of weeks or so. Some of the smaller cap companies seem to pick up somewhat, but still, so those big guys, Apple and Nvidia now, and some of these others, right? Microsoft, Amazon, I guess those guys. I think you showed some charts you showed one on Nvidia. My goodness, you just put in your weekend 360 report, and I mean, this thing looks like it's going nuts. I mean, it's just like it gapped up, and then you had a little box drawn around it for a few days, and then it just shot through that thing again. I mean, what do you make of that, Michael?
That's NVIDIA you're talking about. Yes. In the weekend report, we focus on NASDAQ 100 and the S&P 500, and we did various time scales of trend measurement. And we issue specific numbers so that our subscribers have numbers. They know that if these numbers are hit during the week,
right,
and especially close the week below certain numbers, that probably you're starting to roll over. We define these every week because the numbers adjust, But we're also focused on the extremely narrow leadership. Because basically, we said the weekend report jokingly, but not jokingly. If you break Apple and Amazon, forget it. Okay, if they start rolling back over after having made, quote, new price highs, not new momentum highs, new price highs, just enough to make the new price high, just to get the headline. If you start to roll over now, back down below the old high, which Microsoft already did on Friday, it went up above it and then closed back below it. It was at 350 level. If you start to roll over enough and start to trigger our sell numbers, then you can probably throw away any charts you've got and just look at those two, maybe 3 or 4 others, and assume that when the big guys go, it's going. They were the leaders here on the upside, and yeah, some laggards tried to join in a bit, but basically too many key indices within the S&P, like financials, broad financials, not banks. Banks blew the heck out of 2022 low. They collapsed, okay. But the broad financials halted at the 2022 lows. Now, if the S&P had done that recently, then it would have been back to about 3,500 instead of 42, 43, 4,400. Yeah. But XLF ETF of the broad financials got down close to 30. You go back and look at the June low last year, the October low last year. Right now, it's trading around 33. It wouldn't take 2 bad days to drive the broad financials through the 2022 price lows, at which point then the people talking about, oh, it's just regional banks, they would have to come up with a new story.
Yeah.
Okay. We're also watching healthcare sector, which is one of the steadiest sectors out there. When you look at it compared to the S&P and look at the 2022 highs in XLV ETF for healthcare, it's basically gone asleep just below the 2022 highs. It had a modest pullback last year when the S&P had a big one. And it's gone to sleep, and you think, oh, what a safe place to be.
Right.
Yeah, healthcare. But our analysis of long-term momentum of healthcare says you better watch out, because you're trading not but 5 or 10% above levels that if you see those levels, you could get in trouble real quick. Right. Just like we predicted about banks back in late January before the March debacle. So we think the thing that is likely to spark that next up leg in the in gold and silver is the perception that the paper asset bubble is not recovering, it's rolling over again. So that's why we think you should focus.
Right. And so, some of those big stocks, there's 5 or 6 stocks start to tumble and break down. Then the ETFs start to break down. Because I think one of the reasons those big guys are doing so well for so long is because these ETFs go in and buy the whole index, right? And so those are weighted heavily, and so if they break down, all of a sudden people get scared. I think the fear factor takes over, and they're looking for some place to put their money. And you're suggesting commodities and gold and silver. I just wonder, you mentioned. I know you're most bullish on, I think, the soft commodities, the food commodities for the most part. Is that still true?
Yeah.
Yeah. And there's one place, I think there's one ETF that you follow. I'm trying to remember.
DBA. Yeah.
Yes. Yeah. DBA.
Yeah. DBA.
Sort of broad-based, but that's mostly in the agricultural, right? That's ag stuff.
They own ag futures. So, meats, sugar, cocoa, coffee, grains.
Right.
And that ETF right now, for instance, the Bloomberg we get bullish in October 2020.
Yeah.
At that point, the Bloomberg Commodity Index, which is broad, includes gold and silver, includes the energy, includes base metals, it includes the ags. Okay. It was trading about 70. The price low had been in the high 50s. So it was about 10, 12 points off its low. And we turned major bullish and said, there's going to be a commodity explosion. Well, it went from 70 to 140.
Wow.
Did it between October 2020 and February of 2022. Okay, it doubled. Okay. Even that price level it reached of 140. I think its high monthly close back in that surge was 131. Okay. Compare that to the price highs it had in 2008, which was 237. So we were still halfway back to the highs. So everybody's screaming, commodity prices are through the roof. Never baloney. They're still cheap, historically speaking. Okay. Yes, the percent gain year over year was dramatic, but in terms of real price levels, they're still cheap. Okay. They since pulled back, and now the Bloomberg is at 105. Okay, so it's still well off the high close of 131 that it had in 2022 monthly close, but we think it's on its way back up there now. But when you look at DBA, it's literally decimals from the high close it posted in 2022. So it's the ag commodities are back to the high close of that prior surge, and they're outperforming the Bloomberg. So the component within the Bloomberg to look at are the ag commodities and stocks related there too.
Yeah.
Grain related stocks, sugar related
fertilizer,
stuff like that. Again, that's the place to look.
Yeah.
But we still do not think that the commodity upturn that we think is probably underway now, a resumption of the major upside, will beat gold or silver. It's very similar to the late 70s when we had a big boom in commodities. And while it was enormous, while stocks did nothing, wasteland, commodities exploded, but gold and silver beat them. And we think that's going to be the case this time too. So still the better place is gold, especially silver.
Yeah.
But secondarily, I think the ag commodities will be a good place to be.
Right. And so gold and silver, the monetary metals, if you will.
Yes.
I guess you're seeing some problems on the monetary front, perhaps. How do you see the dollar now?
Yep. Now, the dollar's been very interesting because, as we said, there was a big move in 2022 that turned everybody's head.
Yeah.
In our weekend report, I suggest to your viewers that they send me an email. Go to our website, Oliver MSA. You'll find who we are, and you see my picture, and underneath my email. Send me an email. I'll send you that weekend report. Okay. But it shows the dollar. We did a major report on the dollar and the euro and the Canadian dollar, Australian dollar, British pound, and the yen. Okay. Dollar index, of course, is comprised of them upside down, mainly the euro and the yen, the majority components of the dollar index. But the dollar index back in 2015 hit a high above 100 after coming up from the 70s. Okay. When you look further back, it was like a 160 back prior, a decade or two prior. So really all these rallies we've seen in the dollar over the last couple decades at a lesser high each time.
Yeah.
Impressive rallies that involve several years.
Yeah.
But they're staircasing downward over the decades. Okay. We think that run up to 115 that we saw in late 2022 is over. When it came back down to 111, we said sell. It collapsed down under 101 rapidly. Since then, since February this year, it's given a narrow range of 3 to 4% up, down, up, down, up, down. Continues to come back to 101, goes up to 105, 104. Now it's 102. Okay. So it's near the low again. We've got some trigger numbers that we specify that if you hit them, then that 101 level that we've used 2-3 times,
yes,
it's going to blow. Okay. And you're going back into the 90s. And we've got another trigger level that I won't specify here because our subscribers get it.
Sure.
And if you break that number, we're going back to the all-time lows. We're going into we're going to have a dollar crisis. In other words, the foreign exchange markets, especially the dollar, which have been fairly percent-wise comatose for the last 7 years in terms of what kind of percent movement you're getting compared to prior movements. Yeah, there have been some dynamic moves, but they're in narrow range, 10, 12, 13% range.
Right.
And most of that lesser than that. That range is going to end, and we're going to get violent in the Forex markets again. Now, that will help gold, of course. Although I have to caution, remember, gold went from just above 1,000 in 2015. It doubled in price by 2020 over a 5-year period. And during that same 5-year period, the dollar did that. Yeah. So it doesn't need the dollar. But if the dollar does get weak in a dramatic way, that will help gold.
Sure.
More so. Yeah. And we think that's about to happen.
And it might help the commodities as well.
And I think that would also help the commodities.
In dollar terms, they'll be marked up. Yeah.
And think about it this way. Let's say you're a foreign investor and you've been heavily invested in U.S. stocks, which, by the way, has been a place to be in the global stock market.
Right.
From 2009 to 2021, we beat the pants off the other indexes of the world. Europe, even China. China doubled. Okay. It's low in 2009, and where it is now is like a double. So it's not a bubble.
Yeah.
Even Europe had some good gains, but nothing compared to the U.S.
Right.
So you're a foreign investor. You're heavily invested in U.S. paper assets, whether it's muni bonds, treasury bonds, you got killed last year. But if all of a sudden the dollar starts to shed its value, then your portfolio isn't just being hurt by, let's say, a declining stock market. You're being hurt badly by a declining dollar. So a downturn in the dollar would also exacerbate foreign participation, lessen foreign participation in U.S. paper assets, which would further exacerbate the bear market that we think is coming in the stock market.
Right.
So it's a big variable, which has been fairly quiet for quite a few years, and I think it's about to get noisy again.
Yeah, we can certainly see a lot of reasons why. If the equity markets are overvalued and they're losing money in the bonds and the treasuries as well, they lost. I mean, everybody lost, but yeah, you can see, and Alistair McLeod points out there's just huge amounts of money from the foreigners that are still in the United States.
No.
And, he's a dollar bear as well because he thinks that ultimately the wheels are coming off the wagon. But it seems like there's still a lot of value. So people are still these fantasy stocks, these get rich quick stocks that people are really jumping on. I mean, it's tempting. It's tempting. I mean, my son talking to me about AI, and I started looking at some AI stocks, and gosh, these things just move like a bat out of that hot place, And I'm saying, gee, well, maybe I should dabble in some of these things. There's a company called AI that looks very interesting. But boy, if we're getting ready for a major decline in the equity market, but here's the thing, Michael. I look at Exxon, for example. Exxon is selling about a little over $100. And that sounds like a big number to me because I'm used to buying penny stocks. But that thing is selling at, I think, 5 times its EBITDA. It's selling at 5 times its EBITDA. Its enterprise value is 5 times its EBITDA. It's at almost an all-time low for Exxon. So, yeah, you're saying you think that the commodities in general, the oil isn't a leader now. It was earlier on in this bull market. In this long-term bull market, but I think there's some huge value, and I think also, I think you follow Freeport-McMoRan sometimes.
Yeah, it's it's Freeport-McMoRan, copper and gold.
Okay? Yes, so exactly.
It's got exposure both ways in a big way, and I think that's an interesting place to be. I do suspect that the gold mining sector, which is a dog. Okay,
it's a dog.
It behaves like a little temper tantrum dog. When gold is going up, it zips up front. The leash is pulled, and when gold pulls back a bit, it panics. Okay, so it's a wild dog. Okay, but once the credibility of the gold upturn, and we already think it's credible. We think it's been credible for some time. Hits the average investor, and they suddenly see that other alternatives that they've been playing games with aren't working out. And the gold miners, how cheap they are as a sector relative to earnings and so forth, and relative to gold.
Yes.
They could zap out of the hole in big percentage terms, and we think they will relative to gold. So while gold is the mama, silver and the miners will be the better place to be. And we think that probably will occur somewhat simultaneously once the price charts, not the momentum charts, which are already positive, the price charts finally blow through the gold highs, 2100, for example. Right. Or silver goes through what we think is a level that will excite price charts. It's just above 26. It's going back to the highs of this year and the high of March 2022 on weekly closes. There was peak closes of just above 26 both times. Okay. Once that occurs, I think then the emotion will move into the miners.
Right.
But a comment you made about the AI.
Yeah.
Let's assume that the assumption is even correct, that it's going to change the world. Well, the dot-com peak, internet stocks, the notion of the internet and all the explosive variables that were coming from it in 1999 and 2000, they were true.
Yeah.
In fact, they're truer now when you look back than you even thought they would be then. Okay. And yet that sector dropped over 80%. Between 2000 and 2002.
Right.
So even though it was true, the assumption that it was going to change the world, you still had a bubble break and it dropped over 80%.
Right.
Okay. So
maybe the message. So maybe the message then, Michael, is to keep some dry powder, have some cash available when this equity market finally hits the skids. And of course, I would argue that there's no better cash than gold. There's no, I mean, it over the long term anyway. Gold beats the dollar. It appreciates versus a depreciating currency. So I guess maybe the strategy might be gold, silver. Silver, though, is much more volatile, so it
Yeah.
stings when it goes down. But it's
Yeah, if you get in it, be ready for that.
yeah, you have to be.
Don't get
ready for that.
upset when gold drops 1%, silver sometimes drop 3 or 4. When gold goes up 1%, silver will go up 3 or 4.
Exactly right. Yeah.
And that's the behavior of that market. There'll be times, and I'll probably put this as a headline at some future date, when you get gold out in the mid to upper 2000s in a rush, okay, and you get silver to gush through the $30 highs we made in 2020. There's a void between that and those old highs of $50, But you get up into that zone, you're going to have days where gold will have $50 downswings in 2 hours. Okay. You'll have $2 drops in silver in a day. Okay. It won't mean anything. It'll turn around and go up $4 the next day. But you got to expect that. And if you don't expect that and aren't prepared for that, you don't belong in those markets.
Yeah.
And therefore, position yourself accordingly. If you can't take the volatility, then don't go for the leveraged instruments. Maybe go for the unleveraged bullion equivalents. Go for the miners, but don't use calls. Just buy the miner, et cetera, et cetera. So you have to think about that as an investor.
Right.
Where do I fit in this? If this unleashes, what do I really want? What leverage do I want? What time frame, et cetera. So think twice and don't blame the market, because we've had a lot of zigzags in silver on the downside, but we've gone from 17 now and we're above 24. It's a matter of 6 months or 7, 8 months now. And we're not far from blowing through the structures that will upset all the price chartists, the price chart bears.
Right.
So expect the volatility and prepare for it.
Right. Yeah, and I don't know of anybody, this is from my audience, that I don't know of anybody that does better, at least from my account, than you have, Michael. You've been just fabulous. You've kept me in gold when I was ready to get out at times, and various other markets as well. So what people need to realize, it's olivermsa.com. You can go there to, Michael sends out stuff, extemporaneously. Whenever there's something happening that is very important, you'll get a message, you'll get an email in your inbox to let you know what you need to watch out for and what sort of trigger levels you need to either get into or get out of markets. It's been so helpful, Michael, and you've been wonderful for our show, Turning Hard Times into Good Times. And well, it's there've been some hard times, but we're looking forward to some better times, I guess, coming up pretty soon for those that understand what money really is. So I think it was J.P. Morgan that said, "Gold is money, everything else is credit." And people want to buy those credit instruments. Well, that's fine until someone can't pay you back, and then it's not such a good deal. Michael, thank you so much for spending time with us again. It's always great to see your face, not just to listen to you, but also because you're a colorful character. I like to say that you This is Juneteenth night. This is Juneteenth. I think today is Juneteenth, or that was last Monday. But actually, you are a pale-faced colored guy that does well. You do a great job. Let's just probably put my foot in my mouth a few times here. But you're an entertaining writer, is what I'm trying to say. And it's not just numbers on charts and stuff. It's you have colorful language that makes it a fun read as well. So
thanks, Jay.
Thank you very much. All right, folks. Well, that is it for this week. Next week, Colin Cattell. He's the co-chairman and founder, CEO of Newfound Gold. And I'm telling you, I've raved about other mining stocks, but this is one of the biggies. I think perhaps, there's a company called Newfound Gold that Quentin Henning was instrumental in finding. It was a company maker for Kirkland Lake. Quentin told me before they started working on this, there's going to be numerous deposits like Newfound, or like the one in Australia, Fosterville. And lo and behold, it's panning out. And I don't think the market has any sense at all about what this is worth. And I think they're probably going to be a takeout target within the next year. But in any event, you want to listen to what Colin Cattell has to say next week. He'll be here to talk about that. And also, there's another company that he founded that will allow you to buy Newfound at a 50% discount. So Colin will be here to talk about that. Also, Mike Spreadbarrow, the acting co-chairman of Novo Resources, will be with me. So until next week, goodbye and God's blessings to you.
All financial advice provided on this show is for entertainment and educational purposes only. The financial ideas and strategies discussed are only provided as a starting point for a conversation about money matters. With regard to your particular investments and financial strategies, consult your financial planner, CPA, or investment professional. All your financial decisions are yours and yours alone to make, and subsequently are solely your responsibility. The information that is supplied through the context of the radio program and any repurposing of its content by the host or network is a combination and collection of solid financial investment understanding, opinion, and comments. This network, show, and its host are not liable for financial strategies, outcomes that you employ in any manner that result in any kind of loss. Shares of corporate sponsors may be the subject of buy or sell recommendations in Jay Taylor's newsletter in accordance with Jay's objective opinion.